Today is our day 2 for the marathon PM class, and our hope is to solve 10 diets for this marathon class. So we'll be solving 10 diets. I've done the analysis already, which I've made available on the platform. I believe everybody must have seen it. 10 diets from 2020 down to November 2024. All right, we'll be solving technically 90% of those questions. And I believe that there's no way that ICAN will be able to escape it. You should be able to pass stainlessly this diet. Now, in our first class on the marathon, we looked at working capital management, and we solved a standard question on working capital management. I've made the video available on the video platform. But in today's class, we'll be looking at inventory management, and we'll also be solving a standard question on inventory management. Now, before I solve that question, it will be barbaric that I don't explain what inventory management is. I'm going to define what inventory management is, what you should look out for an inventory management question, and how we are able to solve inventory management questions in ICAN. And also, when ICAN is setting inventory management questions, they usually combine it with just-in-time accounting technique. So we are going to be solving just-in-time accounting technique questions in addition to what we have. We only have 1 hour, 30 minutes to do justice to this question. Now, this is my material on inventory management, all right? Just 2 pages, but stay with me. Now, as an accountant, you will not only find yourself recording the inflows and outflows of money. You don't only record the sales of goods, and you don't only record the increment of expenditure. You will also be found seeing yourself in that position where you have to make decisions that is going to center around inventory. It means that you're going to advise your company what should be the quantity of inventory that the company should order at any point in time. Many of you think that you can just order as many inventory as possible in as much as you have money. This does not work like that in practice. In practice, the procurement manager must determine using statistical tools what should be the accurate number of inventory that should be ordered. Because the more you order inventory, the higher the cost. Even if on the other way around, the more you order, you are getting discounts. It depends. The more you order, the higher the holding cost, the higher the mobility cost. The truck you will use to carry 500 cartons of Indomie, different from the truck you will use to carry 1,000 pot Indomie, different from the cost as well. So whenever you are trying to order inventory in reality, there's supposed to be a statistical backup, a mathematical backup that shows the quantity of inventory that you should order. All these things is consigned in inventory management. Now, when you also look at inventory management, you're trying to consider what are those costs that makes up inventory. Many of you must have done this in your financial reporting, where you are being taught that the cost of an asset and the cost of an inventory comprises of the purchase cost and every other cost that you incur to bring the inventory to the correct location. This will also be addressed in performance management. In performance management too, the cost of inventory includes what? The cost of purchase of that inventory and every other cost that you incur to bring the inventory to the correct location. And it also goes beyond that which I'm going to show you in today's class. All right. So when you talk about inventory management, we're talking about the totality of how you are able to manage everything that regards to inventory. Ordering of inventory, cost of inventory, I get it now. Inventory management totality, where you talk about just-in-time techniques. Everything that happens to inventory, you are in charge of recording it. Now, what you also need to understand, you need to understand that the cost of an inventory comprises of the purchase price of that inventory. That is the price that is stated in the invoice, the catalog, okay, the invoice price. Okay, this inventory costs so amount. That's what we mean by the purchase price of that inventory. Number 2 is the reorder cost. That is cost of making the order to purchase a quantity of material items from a supplier. Now, for you to order inventory from your supplier, you will incur cost, even if many of you do not know that the mail you are sending is cost. Sometimes you have to initiate a meeting with the suppliers, and in that meeting, you will spend money. It's also part of the cost. As an accountant, you should be able to track the cost of order, okay, which is the ordering cost. So the amount you spend to order your product, all right, is the ordering cost. Now, the next one is going to be, okay, they include the cost such as cost of delivering of purchased items. Now, when you order the goods, which is under the reorder cost, when you order the goods is meant to be delivered, Abi. So cost of delivery is under the order cost. Then the cost associated with placing an order, such as the cost of telephone calls, is also what? A reorder cost. The cost of checking the inventory after delivery from the supplier is also what? Inventory cost. So as your supplier delivered, you have to get some people to cross-check everything that came in with the manual, with the inventory receipt notes. You have to get people that will do that, and you pay them. All these things are what cost to the organization. So don't think that is when you just buy inventory, that's the only cost that is incurred. You incur cost at every stages: the purchase cost, the ordering cost. Then back setup cost if the inventory is produced internally. If your inventory is produced internally, like you have to factory and make raw material, the machine that you use in producing that inventory, there's going to be setup that is done in that machine. The setup that you do on that machine is also part of the inventory cost. Does that make sense? So we have looked at the purchase cost of inventory. We've looked at the other cost of inventory where I gave you examples as I've listed. Then the next one is inventory holding cost. Please pay attention. Inventory holding cost is the cost that you are going to incur for keeping the inventory in your warehouse, or they call it warehousing cost. The cost you incur for warehousing your inventory is known as inventory holding cost. So if you have bought your inventory, you have paid for it, Abokis or all these uploaders have uploaded it, and they kept it in your warehouse. It doesn't end there. Sometimes you may need to buy some kind of chemicals to preserve that inventory. Unless rats, rodents, they will come inside that warehouse and eat up your gari and your rice. You have to put chemicals there. There are some inventories that you AC the whole warehouse. If you don't AC it, it will spoil. There's some inventory that you have to create stack for it in your warehouse, stack, because you have to put those inventory in a stack. You can't just put them on the ground unless cold will congeal them. All those things are holding inventory, holding cost. So there are costs that you incur because you want to hold. Replace that hold with warehouse because you want to warehouse inventory. I hope I'm making sense. Sometimes when you even warehouse inventory, you will now hear that obsolescence will hit that inventory. Imagine that you bought laptop 1,000 pieces and kept in your warehouse. And you know this technology world, things are changing every minute. The laptop that you bought is a 5th generation. Before you hear, 2 weeks later, you heard that China has released 7th generation. Everybody that wants to buy now is buying your 7th generation. Your stuff will not sell well again. That is a cost. We call it obsolescence cost. I hope I'm making sense. So when you talk about inventory holding cost, they are the totality of costs that you incur because you have decided to keep your goods in your warehouse. And this includes the cost of capital tied up. Because you have decided to put stock in your warehouse, you are tying capital. One that you're supposed to use to do something else, you are going to buy stock and keep in your warehouse. That is the cost. So you have tied capital in your goods. The capital is supposed to be producing revenue. Or let us say capital is supposed to be producing profit. But now your capital is tied up in inventory. It is only when you have sold that inventory that you now begin to realize revenue. Please take note of that. That is why in accounting, when you buy inventory, you categorize it as assets. Then when you sell that inventory, you categorize it as what? As revenue. So revenue is only derived when an inventory is sold. If it's not yet sold, it is tied down. Another example is cost of warehousing. Another example is obsolescence, deterioration, and theft. Imagine that you store in your warehouse and some guy just broke in and stole your product. That is going to be a cost on your part. So please, these are examples of what? Holding cost. Another one that we have is shortage cost. Shortage cost. Shortage cost. For example, lost profit on sale, future loss of profit due to loss of customers' what? Goodwill. Now, when you talk about shortage cost, it includes what? Future loss of profit due to loss of customers' what? Goodwill. When customers do not patronize you, you will be shocked. Your profit is going to run short. Yes, some market people say, I don't make them today. My profit short or my money short. That my money short simply means that customer did not patronize them well, or maybe what they sold, they were unable to recover the cost of that product. That can also be what inventory was. That can also be a cost to you because when you store inventory in your warehouse, sometimes you may be unable to recover much from that inventory because maybe when you bought it last month, it is not 3 months later, some other product has not emanated out, and you just need to sell your own out. Okay, just like the one that I think Temu is doing, they are pushing out stocks out of their warehouses, and some other factories are also doing the same thing. They're pushing out stocks out of their warehouses, giving discounts, telling you to spin one thing or the other, and you're collecting discounts. You're on your own. Are you getting it now? So these are cost of inventory. If ICAN is testing an inventory management question, and they give you a calculation, they can also tell you to determine what the cost of inventory would be. And if they tell you to determine the cost of inventory, please determine the purchase cost of that inventory, other cost of the inventory, holding cost of the inventory, and shortage cost of the inventory. Once you can itemize these 4 variables, then you can compute the cost of an inventory. Please take note of that. Purchase cost of the inventory, which is A, other cost of the inventory, which is the ordering cost, holding cost of the inventory, which is the next one, holding cost, and the last one is shortage cost of what? Of inventory. Please take note of that. All right. Let's move further to the concept of economic order quantity. Now, I mentioned earlier when I commenced this class that you don't just order inventory. Oh, my company has money. You check bank account. Junior Bank is showing 15 million. Oh, company has inventory. Go and buy raw material. No, you don't just order inventory. I have proven and I have said that for you to order inventory, you must statistically or mathematically prove it that this is the quantity that we should order. Okay? Any other thing can obstruct it, but at least let there be a backup. Just like you trying to say pay salary without showing us the breakdown of the salary, why is this person collecting so amount, why is this person collecting so amount. So you cannot tell us to order inventory without giving us a backup for that inventory. A good way to tell us that you have a backup for that inventory that you want us to order is by providing an EOQ analysis. EOQ simply means economic order quantity.
I think
making noise. That person is always making noise. My network is not fluctuating. You are the one that is fluctuating. Please mute your line. Other people can hear me. Please, can you hear me, guys? Can everybody hear me?
Yes, sir. Yes, I can hear you.
That lady is always, Florence, always disturbing my class. It's a constant thing. And we block you from Zoom. We block you from Zoom. Zoom will even, once they see your name, they will not admit you again. Okay. EOQ, I said, is economic order quantity. And I've said it clearly that for you to prove the number of quantity that we should order, the statement that you're going to show to us is an EOQ statement. Now, let me explain. For you to order inventory, as an accountant, you are trying to order inventory that is going to minimize the cost of holding inventory. And let me make it simple. For you to pay salary as an accountant, you are trying to pay salary on a ground that the company is doing what? Minimizing cost. Because everything that you people are taught to do is to minimize costs. Even if the person is qualified, MBA, PhD, MSc, you still want to pay 400,000. Even if your company can pay 1 million, it's 400,000 you still want to pay, because why? They have wired all of you to what? Minimize costs. So use that idea in inventory management. Anytime you want to order inventory, what you remember is they have wired me to reduce cost. That is to say, you are trying to purchase inventory, the quantity at which is going to be minimal in cost. So everything concerning inventory management is concerned about what? Procuring inventory in order to enable the company to what? Incur lower cost while procuring that inventory. It is cost minimization. So inventory is a cost minimization problem. Please, is a cost minimization problem for both of you that did QA in school. Minimization. Don't worry, minimization. So why do we call it a cost minimization problem? Because anytime you are spending money, your idea is to reduce costs. Anytime you are receiving money, your idea is to increase revenue. So since you are spending money to order inventory here, the idea is for you to reduce the cost of ordering that inventory. Please note, in case your brain is telling you that ordering 100 inventory is cheaper than ordering 70, is expensive than ordering 70 inventory. It's a lie. Sometimes ordering 70 laptops can be cheaper can be more expensive than ordering 100. So you have to show it mathematically. If it was that easy, they will not tell you to present it mathematically. So sometimes if you order many inventory, it can be cheaper than when you are ordering lower inventory. And sometimes it can be higher than when you are ordering what? Lower inventory. It all depends on the trade agreement. It all depends.
Can hear you, sir.
Please, can anybody hear me?
I can hear you. I can hear you. I can hear you.
Florence, please go and buy new headsets. Go and buy new earpod. In short, change your phone. Because you and Zoom, we are quarreling. That's what it means. Everybody can hear me. Please, or you log out and log in again. Please, log out and log in again. All right. So what am I trying to say? I'm trying to tell you that the quantity of you are ordering does not mean that the higher the quantity, the higher the cost. Most times, the higher the quantity, the lower the cost. Most times, the higher the quantity, the higher the cost, depending on the trade agreement or depending on the question module given to you. Anyways, I am not meant to debate on that now, okay? But just understand that EOQ is a mathematical model used to calculate the quantity of inventory to order from a supplier each time that an order size is made. The aim of this model is to identify the order quantity that minimizes what? The total annual inventory cost. EOQ is a model mathematically. We use it, we solve it mathematically to determine the quantity that a company should order at any time, in the sense that that quantity is going to minimize the total annual inventory cost. What is the total annual inventory cost? I've said that before. Annual inventory cost includes your purchase cost, your ordering cost, your holding cost, and your what? This is the last one here, your shortage cost. Does that make sense now? So the quantity of inventory you are going to order is such a case that all these costs that have been attached to inventory are going to be minimized because the company does not want to incur too much cost. I hope I'm making sense. That's what we mean by EOQ, economic order quantity. Now for EOQ, because it's a mathematical model, I know at times that is mathematical or scientific, must have assumptions. I guess it to have assumptions. So they said whatever goes up, come down. It's not in everywhere. You go to space, you will not come down. If you go up, you cannot come down. So there are assumptions to the rule. So for EOQ, what are the assumptions to the rule? The assumption to the rule of EOQ states that no bulk purchase discount for making orders in large sizes. We are not giving you discounts whenever you are buying too much. So anytime if I buy 2 containers, no discounts. So that's the assumption for EOQ. Please pay attention. It's always examinable in ICAN whenever they are bringing EOQ. So it means that if you are buying 50, you are buying 100, you are buying 1,000, the same price that will sell per unit, that's the same price we will sell if you are buying higher. There is no bulk discount given. The next one is that the order lead time. Lead time in finance means the time between placing an order and receiving delivery from that order. Many of you that went to take your money to order from Temu, if you ordered last month, I think Temu said this 1 month. If you ordered last month, the time it took you to order and the time it took Temu to deliver that product is what we call lead time. If it takes 3 weeks, we'll say 3 weeks is the lead time. If it takes 1 month, we'll say 1 month is the lead time. So lead time is simply the distance it takes you to order and also to receive. Can you still hear me, please? Am I still audible? All right.
Yes, sir.
Yeah.
The last part is the formula for, okay, the next one is annual demand for the inventory item is constant throughout the year. It means that the demand of your product is known. You already know that before you are commencing 2025, this is the customers, this is the list of, this is the total demand that I will be getting for my products. So marketing, sales department must have done that analysis for you. They would have told you that last year we sold 1 million or we sold 10 million item of our product. This year, because of the market that we are going by, we are increasing it by 15%. So they know that demand, they know the actual amount of demand, and demand must be constant all through the year. If it's 10 million, it must be 10 million 2024, 10 million 2025, 10 million 2026. Is that realistic? It's not realistic. So there's usually most of the assumptions that underlie most of these mathematical models are not realistic. Okay, but that one does not concern ICAN. If I can ask you, give them their answer. The formula for EOQ is this. EOQ is equals to the square root of 2 dou all over h. EOQ is equals to the square root of 2 dou all over h. The D there is demand, which is annual demand. If I can give you monthly demand multiplied by 12 to get annual demand, demand is always per year. Nothing can change it. O is ordering cost. O is ordering cost. O, this order I say 2 dou. O is ordering cost. That's why I call it fixed cost per order. H is holding cost. Holding cost per item of inventory per annum. That's the holding cost. Am I making sense now? So I've done it there. Now, what is holding cost? Now, all these things have their individual formulas. In case I can tell you that I should determine what holding cost would be for this company, that is to say the cost it will cost them or the amount it will cost them to keep inventory in their warehouse. The formula is average stock multiplied by holding cost per unit. I can give you holding cost per unit. It is not possible. They must always give you holding cost per unit. When they give you holding cost per unit, they will not tell you to determine holding cost for the whole product. Now, most students will now go and multiply the holding cost per unit by all the products that they told you that you are ordering, which is the demand. It is wrong. Holding cost is always on average stock. Please, holding cost is always multiplied by average stock. And I will prove to you why. The quantity of goods in your warehouse yesterday, 100 units. Will the quantity remain 100 units? Won't you sell? Even in that same day, you may sell 10 away. The next day again, you sell again. The next day again, you sell. So it is impossible for you to know the quantity of stock that you have held in your warehouse for a month, because over the month, it was fluctuating. Therefore, the ideal thing to do under finance or under performance management is to look for the average. So if we had opening of 50 and we had closing of 100, we have them together and divide by 2. So what we are banking on is the average stock, because we are unable to say this is the exact number of stock that was in our warehouse in that particular month. Don't go and go. Holding stock is to be multiplied by what? Holding cost per what? Unit. That is average stock multiplied by holding cost per unit. How do you get your average stock? I'm going to give you 2 things. It is not in textbooks. Average stock is opening stock plus closing stock divided by 2. That is one formula. Average stock is also EOQ, economic order quantity, and I will prove to you. If ICAN tells you in the question that you should calculate EOQ, if you calculate the EOQ using this formula, the figure that you get shall be termed average stock for the purpose of computing holding cost. I hope I'm making sense. So if ICAN says that EOQ, economic order quantity, calculate it, or ICAN gave you economic order quantity in the question, please don't go and start doing opening stock plus closing stock divided by 2 again to get average stock. It means that EOQ supersedes opening stock plus closing stock divided by 2. Where the question asks opening stock, closing stock, and EOQ, EOQ supersedes the other definition, the other formula. So please take note of that. Many students have failed this course because of this idea. So when ICAN gives you economic order quantity, or when you have calculated economic order quantity, and the same question is telling that there's an opening and closing stock in that question, don't go and say that the president said it's opening plus closing divided by 2. EOQ supersedes that definition. But here there is no EOQ. You are now bound to use opening stock plus closing stock divided by 2. It will fly. All right. The next one is number of orders. Number of orders, that is number of times that you order. In case that you are told to calculate the number of times that a company will place order. The number of times that a company will place order is equals to demand divided by order quantity. So if I need 10,000 units of my products, and order quantity simply means anytime that I am ordering, how many quantity do I always order? So if I always order 100 units of my product, that means that 0, 0, 0, 0. I will order how many times? I will order 100 times. Am I making sense? Number of orders is equals to demand divided by order quantity. Demand is the total quantity of products that you want to buy, or your customer want to buy from you. And because your customer want to buy 10,000 units from you, you need to go and buy it from your supplier. Anytime you are going to your supplier to buy, you always buy 100 units, which is what? Order quantity. I guess now, which is the same as EOQ. Now, that order quantity that you are buying 100, if you take 10,000 units of goods that you need, divided by the 100 that you are buying every time you are going to buy, how many times do you think you are going to buy for you to meet up with this 10,000 quantity? It is 100. Am I making sense? Are you with me, please? That's what we mean by number of orders. The last one is ordering cost. Ordering cost is the same thing. Just say ordering cost per unit multiplied by number of orders. Okay? Ordering cost per unit multiplied by number of what? Orders. Please take note of that. Please take note of that. EOQ is regulated by formulas. The more you know the formulas, the more you are able to do justice to the question. If you don't know formulas, you cannot do justice. There's no way you can handle the question. What I have done in today's class is to give you an overview of what EOQ is, inventory management is, and give you some certain things that ICAN may require you to solve in their question. Now, in the November 2023 question, ICAN specifically tested holding costs. Holding costs. This holding cost that you are seeing here now, that's what we are going to examine in this question 2 of Peolu. Please pay attention. Let's interpret this question. Come to the requirements. The first one says, discuss generally the key conditions that are necessary for the successful implementation of JIT manufacturing system, 7 marks. I'm going to explain what that means, and we're going to look at that. Now, B now states that calculate the cost of holding inventory. Please mute. Calculate the cost of holding inventory for each of the quarters and the year in total under the current production system. So they are telling us to calculate the what holding cost for what inventory on a quarterly and on total basis, which is 6 marks. Finally, they now said calculate the financial impact of changing to the JIT production system, another 7 marks. This gives us 20 marks. But when I answer this question, because this question is very simple, this is more or less like a nursery 2, it should be nursery 1. It should be nursery 1 question. All right, let's do justice to this. Opeolu Limited produces and sells household items. For a particular period, the marketing department has prepared the following quarterly expected demand. So these are quarterly demand, not yearly demand. So if I add all the quarters, that will give me my what? My yearly demand. I hope I'm making sense now. Yearly demand. So in first quarter, we are going to, our demand is 400,000, meaning what people are demanding from us is 400,000. Second quarter is 440. Third quarter is 760. Fourth quarter is 560. Now pay attention. Question is getting tricky from here. The existing production capacity can only produce 540 units per quarter. So what it means is that our plant, our factory can only make 540,000 units for every quarter. Now calm down, let's analyze this. It means that in the first quarter, we can only produce 540. Now, it means that in quarter 1, we have enough stock to meet up with demand. Am I making sense? Am I communicating?
Yes, yes. Yes, sir.
In second quarter, the demand is 440. We still have 540 that we can produce. We have sufficient stock to meet up. Am I making sense now? But when it comes to third quarter and fourth quarter, there's a problem. So we're going to asterisk those two. So in the third quarter, we have 760. In the fourth quarter, we have 560, which is above the production capacity of the plant. Then at the back of your mind is also telling you that if I produce 540 and I sell 400, I'm still left with 140 now as closing stock. Makes sense, Abi? That closing stock will come to quarter 2 as what? 140. So please, 140,000 plus 440,000, what will that give to you? You know they did not come with calculator. So yeah, 440,000 plus 140,000. You go on there.
580.
580. You use brain now, no calculator. I am very sure. 580,000. 580,000 in quarter 2 simply means that we can meet the demand, Abi. Why did I do 5? I'm not supposed to do that. I'm supposed to do 140,000 plus 540.
Where did you get 140 from? Where did you get the 140,000 from?
This man is not looking. You are distracted.
540 minus 400. If you
produce 540 and you only sell and your demand is 400,000, won't you have closing stock of 140?
Yes, exactly, 140.
Okay, so in the second quarter, you have a opening stock of 140. If you add that 140 to what you are producing again, 140 plus 540, they're going to 680, Abi?
680. Yes, sir.
That means you can meet up with what? The quarter 2 demand. So I just want you to be dynamic. Just think. Okay, just think. We are not done reading the question anyways. I'm just trying to tell you possibilities of what ICAN is trying to do here. So let me come back again in case of people that their eyes is already blinking. What is this person doing now? Ah, God, this PM. I've suffered. All right. This question states that the demand is 400, 440, 760, and 560. And the question also states that the existing production capacity can only be 540, meaning that you can only produce 540 per quarter. Now, before I move further, because I know there are other information, but I just want you to think outside the box. That's the way you can pass PM. But you can think above outside the box. Now, if you can produce 540 and my demand is 400, that means that I can meet up with my demand here. And if I meet up with my demand, I am having a closing stock of 140. Does that make sense now? So that closing stock of 140, yes. In the second quarter, I will still produce 540 again. That 540 plus my 140 is 680. It means that I can still meet up my what? My 540 here. That's 680 minus 540. Who can do that for me? 680 minus 540. 680 minus 540. Minus 440, sorry, not 540. 680 minus 440. That will give us 240, Abi.
Yes, 240.
240 is our closing stock again. Please, if you don't get it, ask me. 240 is our closing stock again. 240 plus the 540 that we are going to produce again for the third quarter. 240 plus 540. 780. Abi?
Yes.
780. That means we can meet up with the whole 760 in the third quarter. Does that make sense? And we'll still have a closing stock of 20,000. Isn't it? That closing stock of 20,000 again, add it to your 540. That will give us 560.
I don't get it, sir.
Don't understand though. I don't understand.
Do you have your calculator with you?
Okay.
Please pay attention and mute. That person that is on mute, I will take you out of this platform immediately. I only have 1 hour 30 minutes for this class. Please mute. This is normal inventory that you guys have done in IES2, event 3. The question states that you will produce 540 every quarter. The normal production is 540. That's your normal production. Every quarter, the company must produce 540,000 units. Now, my question is, if you produce 540 in the first quarter, does that cover up for your demand or not?
Yes,
Can you meet
sir.
up with your demand or not?
It
Yes,
covers.
sir. It's
Good.
true.
What is the closing stock?
Should be 140, sir.
How do you get the 140? 550 what you produce and 400 the demand, which is sales. It means that you have the closing stock of 140. Please, closing stock of 140 in the first quarter. In second quarter, what will this closing stock be?
To be an opening stock, sir.
God bless you. Opening stock is second quarter. So second quarter. Now, will you not still produce in second quarter? Will you produce in second quarter? What will you produce?
Yes.
540.
540.
Please add it together. That's 680. That's the total quantity of goods that you have now in your warehouse. This is second quarter, 680,000. The 680, please, what are they demanding? What are your customers demanding from you? It's not 540. It's not 440.
440, yes, sir.
Please take out the 440. What does that mean?
It means 240.
That is what?
240.
The closing stock.
That's closing stock now. God bless you.
Yes.
Now, in the third quarter, what will this 240 be?
It will be an opening stock.
God bless you. In that third quarter, won't you produce again?
We will produce.
How many will you produce?
That's 240 plus 540.
540.
Thank you very much. Add it together. Oh, yeah, mathematics. I can student. Oh, yeah, Egone.
780.
780. What is the demand for the third quarter? It's not 760.
760.
If you sell 760, what will happen?
20,000 closing stock.
Oh, yeah, now in the fourth quarter, what will this 20,000 mean?
Plus
Comes an opening stock.
It's an opening stock. Plus it, once you produce again,
Yeah, we
produce.
Produce how many?
540.
540.
540.
Oh, yeah, add it together.
560.
560,000. What's your demand for fourth quarter?
560.
Will you not cancel it out each other?
It's cancelled out.
Yeah, clap for yourself now.
Thank you, sir.
I think people want to be doing it like second, like primary 2 or nursery 2.
Yes, so do it this way.
Okay, let's proceed. So that's what we are, we have not finished reading the question, but we are just trying to assume some things that are obtainable in the question. Now let's continue reading the question and let us see what ICAN asked for us. ICAN has stated, because now the existing production capacity can only be 540,000 units per quarter under regular time. However, it is possible to increase output by 40% if working overtime is introduced. So the ICAN is trying to tell us that we can now work overtime if we need to. Okay, if we need to. And whenever we work overtime, our output is going to increase by 40%. Now the question is, do we really need to work overtime? And do we really not, and should we work overtime or should we not work overtime? That's the question. And let me give you an answer for that. Okay, let me give you an answer for that. You can only work overtime when you are unable to meet up with your demand. Am I correct? Am I correct? Am I correct?
Yes, sir. You're correct, sir.
But when you can meet up with your demand, why are you working overtime? You get it now? So in this case, we are able to meet up with our demand because after we did all this calculation that we did here, as at the end, 560 cancelled 560. our demand was met? Yes or no? Yes or no?
Yes, sir.
Our demand was met for the year. We carried opening stock, closing stock, opening stock, closing stock. As at the end of the year, we met all our demand. That means that overtime that ICAN is talking about, we don't need it. We don't need it. You must be thinking in your mind that if I'm in the exam, how will I think all these things? How will I be able to know that I need overtime or not? The more you practice question, the more you understand it. Okay. So in this question, they said, however, it is possible. They did not say you should go overtime. They say it is possible to increase output. But why would you want to increase output? Your output is your production, not your sales, not your demand, your production. The only thing that will make you to increase your output is because there's a demand you want to meet. But in this case, your current production of 540 units can meet up with your output for the year. So why are you talking about working overtime? There's no need for you to work overtime. Are we on the same page, please? Are we on the same page?
Yes, sir.
Yes, sir.
Yes, sir.
If you have water close to you, just sip the water, okay? We are not in a rush. Just sip the water. We'll move to the next one. Look at this part. Then I said that it is the policy of the company to manufacture units using a constant level of production system. It is the policy of the company to manufacture units using a constant level of production system. I'm going to explain what they mean here. But before that, then I said that means that although the opening and closing stock levels of inventory for the year are 0. Although, let's take it again. It is the policy of the company to manufacture units using a constant level of production system. This means that although the opening and closing level of inventory for the year are 0 units, there are increases and decreases in the quarterly inventory levels. Now, let me explain this. They said that it is the policy of the company to manufacture units using a constant level of production system. What's that constant level of production system? 540. Now, let me explain this. Please pay attention. I will not come back. It's technical, but understand it. It means that we are going to manufacture 540 units constantly every time we want to manufacture. Now, let's think outside the box. Normally, if I produce 400 units for the first time, if I produce 540 units for the first time, listen, if I produce 540 units for the first time, I was only able to sell 400,000 units. If I take it out, I have 140,000 units. Then my demand for the next quarter is 440. What I am supposed to do is to produce the difference between 440 and 140, which is 300. That's what I'm supposed to do because I don't want to waste material. Since I already know that my customer are only demanding for 440, I'm supposed to produce 300 to make it what? 440. But the reason why I am not doing this is because the company has a policy that despite the opening and closing stock, you are bound to produce the exact 540. Ladies and gentlemen, are you getting me? Are you getting me?
Yes, sir.
Yes, sir.
Should I come back? Should I come back?
Yes, sir.
Good. Now,
please come back.
In normal finance, in normal performance management, when you already know your demand, you will tell your production department, produce this demand and give to them. That's what is supposed to happen. It's Nigeria that used to store goods in warehouse. In Japan, they don't store goods in warehouse. Japan operates JIT. I'm coming to that. Japan operates just-in-time technique. That means that once they know their demand, they produce based on that demand. Now, commonsensically, it means that from the first quarter, which is the first period of 2025, for example, our factory produced 540. That was the first quarter they produced. Now, they sold 400. That means that they have a closing stock of 140,000 units. Now, sales department has told them that, okay, second quarter, we need only 440. With their common sense, what they are supposed to do is to say, okay, 440 is what you need. They say yes. 440, we already have 140 in the warehouse. That means that what we will be producing is only 300,000. So that when we have that 300,000 that we are producing with the 140,000 that we have in our warehouse, it is going to equal the 440,000 that our customer needs. We don't need to start storing something in our warehouse again. Does that make sense now? Does that make sense?
Yes, sir.
Yes.
Please, that man that said I should come back, does it make sense now? Like, commonsensically, does it make sense?
Yes, yes, sir. Yes, sir. Yes,
Good.
sir.
But the reason why they are not doing it this way that we just said is because it is the policy of the company to manufacture units using a constant level of production system. They must not change their production. They must not produce 300, 250, 150, and 600. No, they must produce 540 at a stretch. That is why we are not going to make use of this assumption that we see here. We are going to make use of this assumption that we did initially, where we are producing 540 on a constant basis. Does that make sense now? Does that make sense? Okay, it does make sense.
Yes, sir.
Okay, now let's continue. Now, they have said that this means that although the opening and closing inventory for the year are 0, yes, they did not tell us that we began the year with an opening inventory. They did not tell us. And as at the end of the year, 560 cancelled 560 that we did here. That is to say there is no closing inventory. That's what they're trying to tell you. You see, that means that if you do it, this 540 every quarter, you must produce that 540 every quarter, there's not going to be closing inventory. Am I making sense now? If you produce 540 every quarter, all the 540 you're going to produce every quarter plus the opening and closing inventory adjustment, we cover up for everything that we have in demand here. So that's what this question is trying to tell you, that means that although the opening and closing inventory for each level for the year is 0, but there are increases and decreases in the quarterly inventory levels. That means we have opening and closing inventory in quarterly levels, but at a yearly level, there's no opening and closing inventory. Please understand that. There is no opening and closing inventory for yearly perspective, but there's opening and closing inventory for quarterly perspective. Because when we produce 540 and we sell 400, there's a closing inventory of 140. I guess now, for the next period again, there's going to be a closing inventory. For the next period again, there's going to be a closing inventory. But at the end of the 4th period, what we had was 560. And what they demanded from us is 560. That's to say, 560 cancel 560, there's no closing inventory. That's what ICAN is trying to say. The more you are able to interpret questions like this, the more rugged you will be. Now, based on this policy, based on which policy? The policy that we are going to be producing 540 units every quarter. The unit selling price and variable production cost and contribution for the next year is expected to be what? These are selling price. These are our direct material cost, direct labor cost, variable production cost. These are our total variable cost. That gives us our contribution. That one is easy. They now told us that the following additional information is available. Overtime is paid at 150% of normal rates. Let me explain. I have told you that we do not need overtime. Okay, if we are to meet up with this demand, we do not need what? Overtime. But why are they giving us information related to overtime? We are going to know as we progress. Overtime is paid at 150% of normal rates. Okay, and the unit variable, that is unit variable production overhead cost, will increase by 25% for those units produced during overtime. So anytime we want to work overtime, our variable production cost here will increase by 25%. That's what it means. And our labor, that labor is this overtime is paid at 150% of normal rates. That's labor. They don't need to tell you if you are good, you know. It's 150%. That means to say it's going to increase by 50%. Overtime is paid at 150%, meaning that it's going to increase by 50%. Because inside 150, split it. Inside 150%, split it. 100% and 50%. 100% you are seeing here is the normal labor that you are being paid, which is 175. This 50% is the additional. Don't let ICAN bobo you. This overtime is paid at 150% of normal rates. Is the same thing as overtime should increase by 50% of normal rates. It's the same thing. I can just twist it. The same thing. So therefore, labor rate is increasing by 50%. Variable production overhead is increasing by 20%. So that's why I say variable overhead will increase by 25%. So are you getting it now? Are you getting it now? Are you following? Good.
Yes, sir.
Thank you. The company incurs a holding cost based on what? Average inventory. They stipulated it here that based on average inventory. I told you that holding cost is based on two things, average inventory or EOQ. Isn't it? So if you are given EOQ in the question, EOQ supersedes average inventory. And I told that average inventory is opening inventory plus closing inventory divided by 2. EOQ supersedes average inventory. In this case, they told you that let your holding cost be based on average inventory. So forget about EOQ in this question. So the company incurs holding cost of how much? 25 naira per unit per quarter for each item that is held in inventory. For every item you hold in inventory, you will pay holding cost of 25 naira. That's what it means. For every item you store in your warehouse, you will pay holding cost of 25 naira. I still don't get why you said 50%. Your salary is 100,000 naira. Somebody is asking me that question now. He said he doesn't understand why I am saying that the amount is increasing by 50%. Your salary is 100,000 naira. Then I told you that if you work overtime, I get it now, overtime will be paid at 150% of normal rate. Your normal rate is 100,000. Are you getting it now? And your 100,000 is equals to 100%. And 100% is equals to 1 in mathematics. 100% and 1 is the same thing. Therefore, the difference is the 50% that is added on it. So 50% is the addition. So if we say that your salary is now 150%, your salary is now 150% does not mean that they are increasing your salary by 150% too. Your salary is now 150%. Simply means that your salary has been increased by 50% because your normal salary you are collecting now is this 100 or this one you are seeing at the front. While the 50 is the increment. Oh, we have reduced salary and currently the accountant is collecting 150% of his emolument. Don't go and think that they increase your salary by 150%. You are just deceiving yourself. They increase your salary by the addition to that 100. That's what it means. So please understand this normal thing in finance. So your overtime is paid at 150%. It means that overtime is usually paid in addition to your normal basic salary. That's the theory. Overtime is usually paid in addition to your normal basic salary. So your normal basic salary is 175 based on this question. So if we are paying you overtime, we are paying you 50% in addition to this your normal one. That's why I can just add this normal one and the 50% to become 150%. Okay? That's why they added it to become 150%. That's how it is. Please take note of that. Please take note of that. All right? Take note of that. All right. So our holding cost is 25 naira per unit per quarter for each item that is held in inventory. The last point that they gave to us is that the company is considering whether it should change to a just-in-time production system. But it is concerned that due to the fluctuation level of its sales demand, this may not be financially beneficial. So the company is considering, should we change to just-in-time or not? Now, let me give you an example. This thing we did here, that I said commonsensically, you are going to produce 300,000. Add it together to become 440. This is just-in-time production system. Any company using just-in-time production system will use this method. But this other one is not just-in-time. Now, let me explain what just-in-time means. Just-in-time means that you are producing what your customer needs. You do not want to store any inventory in your warehouse. That is the theory of just-in-time. Therefore, this analysis that we did here means that if we go by this analysis, we are not going to store anything in our warehouse. I get it now. You are not going to do what? Store anything in your warehouse because you are producing based on demand. If Zoom logged you out, hallelujah, you have the videos to watch later, okay? Just flow with me. I can't start again. All right? Good. Now, just-in-time means that you are producing just to fulfill the demands of your customers. It means that you will not produce until you have demand. So any company that is using just-in-time, they don't have warehouse. And even if they have warehouse, it's just to produce, put it in the warehouse, immediately they are taking it to the customer. It's a temporary warehouse. It's not where they are going to store. In fact, they don't even have warehouse. As you are producing, bring your truck, come and take department. You don't want to spend money on warehousing. Please, that's the meaning of just-in-time. So where you hear in this question that they said the company, The company is considering whether it should change to a just-in-time system of production, meaning that it should change to a system where it can only produce to meet demand. It does not produce to store in what? Warehouse. Does that make sense now? Does that make sense now, ladies and gentlemen? Does that make sense?
Yes, sir. Yes, sir.
Okay, let me call attendance as usual. Additional. Folake.
Present, sir.
Ayode, is he here? Ayode, is he here? Bleggy. I will take you out. I will take you out.
Sir.
Bleggy, somebody is Bleggy here, Bleggy. Please identify yourself.
I just answered. I said present.
Okay. Chidima, are you there?
Present. Yes, I'm here.
Praise, are you there? Florence, are you there?
Present. I'm here, also, I'm here.
Gabriel, Ify, are you there?
Yes, sir. Present, uncle.
I know that many of you, you can just on your phone, use TikTok on the other phone to distract yourself. So I need to call your names to be on the same page. So we are done with this whole question. Now, don't mind me, okay? I just like to prove everything that is in a question. I am not telling you that you must be able to interpret everything the way I have done before you are able to solve. I'm a lecturer. So I will tell you things that are obtainable, things that you should know. Do not begin to think that you must know it the way I know it before you are able to pass PM. It's not like that. I teach from the perspective where if you want to teach PM tomorrow, I have given you everything you need. In case any student wants to ask you any question, they cannot call your hand. It's not possible. So in case in your head, you're trying to say, hey, this is too much. It's not too much. I can solve this question without giving you all this analysis that is on the board or that is on my screen. Now let us go and solve this question now. Let's solve this question. Sharp, sharp. Now, outline the key stages. Discuss generally the key conditions that are necessary for the successful implementation of the JIT manufacturing system. We're going to come to that. Let's take our B part. Let's solve first. We'll come to that. Let's solve first. So what are we looking for B? We're looking for holding cost, Abi. Holding cost for inventory, isn't it? Please, what's the formula for holding cost? Who can tell me? Who can remind me? Holding cost per unit, Abi. They will not answer me now. Holding cost per unit multiplied by what? The question told us that we should use what? Average was?
Average inventory.
God bless you. This is the formula that we need. This simple formula. Holding cost per unit multiplied by average inventory. We already know our holding cost per unit. They told us already that it's 25 naira. Come and look at it here, 25 naira. This is it here, 25 naira. So there's nothing we are looking at, 25 naira. So the only thing that we're going to look for now is our average event, which is opening stock and closing stock divided by 2. That's what we are looking for, 6 marks. I wonder why ICAN will send this kind of question. It's rubbish to me. I need to challenge them. It's rubbish. So let's just go and solve it. Don't swear for me. Your mind is okay. It's rubbish. It's rubbish. Don't worry. Let's solve this question now. Now, B. We want to solve, what we're looking for is our holding cost, which they did here. Okay? Now, I told you that your demand is supposed to be annual demand, Abi. So our demand is 400,000 plus 440 plus 760 plus 560. That gives us 2,160,000 units. Look at it here. Look at what they did here. They added everything here. I'll tell you why they added. We don't need it. I'll tell you why they added. So they added everything here to give us the total quantity that is the demand. 400, 440, 760, 560. They added everything. That will give us our total what? Demand. What about our annual capacity? We were told that on a quarterly basis, we must produce 540 units. So 540 units times 4 quarters that we have there, that will give us 2.160 units. So our demand is equal to our supply. When demand is equal to supply, ladies and gentlemen, you do not need overtime. That's why they told us that thus, there is no need to work overtime under the existing policy of constant quarterly production. Did that make sense? Did that make sense there? Sharp, sharp. Did that make sense?
Yes.
Did that make sense? Should I come back?
Yes, sir.
Okay, I should come back.
Yes, sir. Please come back.
Okay, good. Remember that the question told us that, look, however, it is possible to increase output by 40% if working overtime is introduced. Then I now told you that, is it good that we work overtime? Are we supposed to work overtime? For us to know whether we should work overtime, we need to compare demand and supply. I told you, nobody needs to tell you this, it's economics. When demand is equal to supply, there's no need for you to work overtime. So 400, okay, 440, 760, 560, they are all demands that we need. Add everything together. The total demand that we have in a year is the addition of everything. So all the demand added together is what gave us 2,160,000 units. Is that one clear now? That's our total demand. Is that one clear? Is that one good? Is it good?
Yes, sir.
So just in case, how do we calculate over time? Calm down. You never know this one. You have to calculate over time. You're on your own. Add 700, 400, 440, 760, 560. That will give us our total demand. Now we want to check, can we meet up with this demand? How can we meet up with this demand? The question told us that we are going to produce 540 units every quarter. It must not change. That is the policy. It is the policy of the company to manufacture units using a constant level of production system. That's just a 540 every quarter. So how many quarters do we have? Quarter 1, 2, 3, and 4. So punch for me. 540 times 4, it gives us what? 2,160,000. So that means that what our customers are demanding is equal to what we can produce. Therefore, there is no need to work overtime. Is that correct now? Is that correct? So if that is correct and we are good to go, even if you cannot answer me, let us now calculate our holding inventory. Remember I told you that our holding inventory simply means holding cost per unit multiplied by what? Average what? Inventory. So let's solve our average inventory. Now, these are the quarters, quarter 1, quarter 2, quarter 3, quarter 4. Now, leave one line for opening stock and start from production because they did not give us anything related to opening stock. This opening stock, we are the one that got this figure. So leave one line. Start from production units in units. We are meant to produce 540 every quarter. That's how we have 540 constant. Then the next one is going to be our sales because production minus sales is equal to closing stock. You know that one already. Production, what you produce minus what you sold. If there's a remainder, it's going to give you closing stock. Now, what we sold is our demand, which is 400. Put your 400 there. 440, put your 440 there. 760, put your 760 there. 560, put your 560 there. Now, if you produce 500 and you sold 400, it means that you have a closing stock of 140. This 140 is closing stock for the first quarter. This will automatically become your opening stock for the second quarter. Whatever I'm doing here is what I did here. Okay, it's what I did here. I'm only trying to show you the way I should present it now for ICAN to understand. Good. So this 140 is my closing stock for year 1, which will now become my opening stock for year 2. They did not give us any opening stock for it's not year 2, sorry, for quarter 2. So they did not give us any opening stock for quarter 1. That's why this one is 0. Now, if I have 140 as my opening stock for quarter 2, and I still need to produce 540, 140 plus 540 is giving me 680. 680 minus what I actually sold will give me a closing stock of 240. Let's go and confirm. Look at the 240 here. Where are you? Look at the 240 here. We did it here. Look at it here. 240. We solved it before. Please, I hope I'm not talking to myself. I hope we're on the same page, too. Let me not go for anything that you don't understand.
We are with you, sir.
So that 240 is what I don't understand, sir. How do you
your voice is very low. Your voice is very low. What are you saying?
How do you arrive to that 240, sir?
God bless you. 140 plus 540 minus 440 equals 240. Oh, yeah, put your calculator. Opening stock plus production minus sales is closing stock. It's normal profit and loss account. Do you understand now? You get?
Yes, sir.
Thank you very much. Now, this 240 is closing stock in quarter 2, Abi. This shall become opening stock in quarter 3. That's why we brought it as opening stock in quarter 3. Does that make sense now? So 240 plus 540 minus 760 gives us 20,000 closing stock. This 20,000 closing stock will now become opening stock for quarter 4. So 20,000 plus 540 minus 560 will now give us 0. That's why the question told us that there will not be any opening stock and closing stock for the year. I'll show you where it said it. This means that although the opening and closing levels of inventory for the year are 0, you don't get it. So the opening is 0, the closing is what? Is 0. Any question? So, any question? Any question? Keziah, any question, please?
No question.
Azaya, any question?
I have questions.
Oh yeah, ask.
I understand this explanation you give, but I still don't know why I don't understand that 50% because you said they were paying 100,000, but where did you get the 100,000 from?
Which one is 100,000?
I said I understand this calculation you give now, but in terms of that level, I don't know why I still don't get it. You said 150%, then we're supposed to know that they were paying 100,000 before. How are we to know they were paying 100,000 before?
Are you talking about that this part that I said overhead is paid at 150%?
Yes, sir. That's the part. It's still 200 where the 100,000 that was gotten from that we said here. How am I going to know that they were paying 100,000 before?
I did not tell you that they were saying 100,000. No, I said I used 100,000 as an example. I said if your salary was 100,000 and now your total salary is now 150%, it means that you have added 50% to this 100,000. I am not saying that 150% means 100,000. I am telling you that over time, is anybody working in the factory here? If you are working in the factory, if you are working in an audit firm and the audit firm is paying you for overtime, the moment they tell you that overtime is paid 1.5, this is the industry language, 1.5. It means that this one means your normal salary. This half means 50% of that salary. This is industry practice. It is obtainable in Pakistan, in Japan, in Italy. It's a constant thing. Every posting textbook you see is there. When they tell you, anytime you hear the word overtime, you always hear the word a time and a half. Whenever you hear the word a time and a half is the normal money you are collecting. The half means they're going to pay you for working extra time. They're going to collect half of your salary in addition to your money. It's the same thing here. Overtime is paid at 150% of normal rate. It means that we are paying you 50% in addition to your normal salary that you are taking home. I can't do not need to open their mouth and say it that way. That is the interpretation. It's not making sense. Do you understand what I'm trying to say? So therefore, in this case, your direct labor, because this overtime is on labor. Please, Chiamaka, stop. I'm rotating my screen. You are writing on my screen. This overtime means labor. But when you're working overtime is labor. Now, in this case, let me clean this up so you understand me clearly. I'm not telling you that 150% means 100,000. I can never tell you that. Now, what I'm trying to say is that your labor is 175 naira. That's your direct labor. This 150% now means that you are increasing this labor by 50%. That's what it means. Don't go and do 150% of 75. They gave you 150% because if you do 150% of 175, please, somebody should punch for me, please. I beg you. Let me explain this. Do 150% of 175. This is 2.5, Abby. This is 2.5. Am I making sense? They don't have calculator. Me, I know. They don't have calculator.
Okay, right now. Yes, sir. You're making sense, sir.
You have calculator. I'm making sense with my own answer. With your own
yes,
answer.
Sir. I'm with calculator here.
Okay.
262.5, sir.
262.5, Abby. This 262.5
yes,
means this is the total money that the person is going to go home with. Both the normal salary plus overtime. But overtime, is going to be 50% of this money. So do 50% of 175. What do you have? 87.5.
87.5, sir.
Add it to the 175 that you were collecting before.
262.5.
That's what we're talking about. So that's giving us 262.5, which is the same thing with this 262.5 here. So anytime you hear overtime, sit down and analyze it very well, because overtime is usually paid based on your normal money you are collecting. So a time and a half. means your normal salary plus half of your salary. Please take note of that. This is first thing. All right. Please, I hope this is clear. We don't have issues with this one. Is it clear?
Okay.
Okay, it's clear. Thank you very much. Okay, let's go back. Oh yeah, now we are done. Now we are done. So since we are done, we have been able to prepare our report in such a way that we now have our opening and our closing stock. So how did I tell you that we're going to get to average stock? Who can tell me the formula for average stock? Yes, average inventory. Who can tell me the formula? Average inventory. Opening stock plus closing stock divided by 2.
Divided by 2.
So 0 for quarter 1, 0 plus 140,000 is 140,000. Divide 140,000 by 2, you get 70,000. Are you with me? For quarter 2, someone should read for me. Quarter 2, what are we going to do? 140,000. Answer me now. 140,000 plus what?
40,000 plus 240,000.
Divided by 2. You get 190, Abi. Is it 190?
190, sir.
Oh yeah, let's do for quarter 3 to be sure again. 240,000, which is our opening stock. 240,000 plus where's the closing stock? 20,000.
That's 260 divided by 2. 130.
130. So what is saying 3 kini? Then 20,000 plus 0 divided by 2 is 10,000. Are we good now?
10,000.
Where did you get that 2 from? The 2 you're dividing it from, where do you get it
The
from?
2 is in the formula. The 2 is in the formula. Opening stock plus closing stock divided by 2. That's the formula for average stock. That's the formula for average stock. It's not in the question, no. It's in the formula.
Holding cost plus
Opening stock
Stock.
plus closing stock divided by 2. That's the formula for average inventory.
Dominion.
Is it clear now?
Yes, sir.
So now that we have our average inventory, what do we do? You know, our formula says what? Average inventory, which is AI, Abi, multiplied by what? Holding cost per unit. So who can remind me what is our holding cost per unit? What's our holding cost per unit? 25 naira. Isn't it? What's our holding cost per unit, please?
25 naira.
25 naira. So let's go and multiply now. So 25 naira times 70, punch it, you get 1.750. 25 naira times 190, you get 4.750. Confirm. 25 naira times 130, you get 3.250. Confirm. 25 naira times 10,000, you get 250. If you add everything together, you get 10 million. Any question? Any question? Any question? Is it only me that is here? Any question? It's clear, Abi?
Understood.
It's understood, Abi. Thank you. Morenike, do you understand, please? Oluwadamilola, do you understand?
Yes, sir.
Please, Omonu, are you there? Do you understand? Omonu?
Yes.
Okay.
Yes, I understand.
Thank you. You will be shocked that when you enter the hall, you see it may just come out. How can we just change one or two things? Then you will start praying for me. Now I'm the one shouting, but what a 4 year, pure water everywhere to sterilize my voice. But once you sit in your exam now, it's over. It's simple. So just understand that you are looking for holding costs. And the formula for holding cost is what? Holding cost by unit multiplied by what? Average inventory. Holding cost per unit is already given to us in the question of 25 naira. But average inventory, they told us that we should use opening stock plus closing stock divided by 2. They will not tell you the question, but you already know that the formula for average inventory is opening stock plus closing stock divided by 2. So we have to prepare an analysis that will give us what our opening stocks are and what our closing stocks are. Once we did that, we had our average stocks given to us here, and we multiplied it by the 25 naira. That gives us our holding cost. All these are in naira. They are in naira. That's the cost, holding cost. Our holding cost is 10 million. Are we good now? So let's continue. We only have a few minutes to round up this class.
Sir, is holding cost per unit always given?
Always, always. If they did not give you, in your example, tell them that you authorize yourself, take your phone, call me, and tell me that they did not give you. We'll find a way to go about it. All right. So let's do this one now. The next one is what? Please, let's go to the B. Sharp, 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 sharp. Oh, the C. Now, the C states that the C states that calculate the financial impact of changing to just-in-time production system. They say calculate the financial impact of changing to just-in-time production system. Now, I'm giving 7 marks for that. That's good. Now, let me ask you a question. If you are currently working in your company and your total package is 850, and that company that you are working for, you left, let us say you are even currently working there 850, then another person is offering you another offer, isn't it? And you are yet to take that offer. You don't even know the makeup of that offer. Let us assume that that offer is X amount. This is your salary that you are collecting currently. This one is the one that you want to collect based on an offer. You are now confused. You now took the case to your father. For those of you that say our father, God bless you. You now took the case to your father. What do you think is the first thing that your father is going to ask you? Who can tell me?
How much is the new one that?
God bless you. Now, if, for example, you now tell your father that the new one is 900,000, for example, please, what is the mathematics that your father is going to do in his head?
It should go for the 900,000.
No. Assume that the new one now, as you are talking to your father, they just say you implement it at BAM, 900,000. What is the math that your father is going to do in his head?
The difference, Nabi?
You have to say, okay.
850.
He's going to say, this one you analyze 850. Okay, the new one is 900. It's just 50,000. Just 50,000. I mean, good. It means that before you are able to make a decision on this new job, you need to know what the one that you are or the previous job is paying. Now, bring this illustration to this part. Calculate the financial impact of changing to just-in-time techniques system. Before we determine the financial impact of changing to just-in-time, we need to know what is the thing that we are currently operating on now. What is the financial impact of what we are operating on now? Explain your experience when you travel to explain your experience between Nigeria and USA. Let's not have not stayed in Nigeria and have not stayed in USA. I didn't want to give you experience. Is it in history? So before you are able to show any financial impact, you must give 2 analyses. The first analysis is the former one. The second analysis is going to be the new one. So in this particular C, the new analysis is going to be what? Just-in-time production system. To calculate the financial impact of changing to just-in-time production system, how can I calculate financial impact of changing to just-in-time when I don't know where I am now? So I must know what impact am I experiencing now. Then I will not calculate the just-in-time. I will not compare both. If I can do the financial impact, whether this current one is better than just-in-time or just-in-time is better than this financial one. I don't know if I'm making sense. So if you have 2 jobs, 850 and 900, you cannot make comparison until you have all your facts. So you can only make comparison when you know that this amount is 850 and when you know that this amount is what? 900. So what's the comparison now? What's the difference now? The impact is what? There is 50,000 difference from the new and old job. Please, am I making sense? Are you following me?
Yes, sir.
Let the woman answer me, please. Am I making sense? For the women,
Yes, sir.
you have husband. You cook one egusi soup on Monday. You never cook another egusi soup on Friday. You are not asking your husband, can you explain the difference between the 2 soups? On Friday. So husband must have tested both soups before he's able to give you the difference. If he has not tested it, he cannot give you the difference. That's the question I'm trying to tell you about. So you cannot state an impact if you don't know both things that you are comparing. So in this case, they say calculate the financial impact of changing to just-in-time production system. That's why they give you 7 marks. They are not joking. They're going to tell us the current system that we are operating, because technically this company is not operating just-in-time system now. They are not operating just-in-time system now. So you must calculate the impact of what they are operating now, then calculate just-in-time own, then compare it and tell us which one is better. That's the what I'm telling you. Do you agree with me? Do you agree with me?
Yes, I will.
Thank you. Please be answering quick. Be answering quick. I don't know whether it's taking you time to unmute. Be answering quick. So now that you agree with me, it means that we need to go to our solution. This is our answer here. This is the impact here. This is the impact. It's a simple solution. But for us to get this impact, please note. Hey, now, I told you that this company is not operating on just in time, Abi. This company, because I know that just in time simply means you are not storing goods in your warehouse. Then if the company is not storing goods in their warehouse, that means that the other method that they are using is that they are storing goods in their warehouse. Now, when they are storing goods in their warehouse, how much are they spending? 10 million naira. So this one that is here is the first option that we have, option 1. We've already completed it before. We don't need to recompute again. Am I making sense now? So the option 2 that I want to compute now is based on what? Just in time. Then we can now compare which one is better. Do you agree with me now? So I told you that the question is saying that calculate the financial impact of changing to just-in-time production system. You ask yourself, just-in-time production system, you are changing to it. What are you operating now? What you're operating now is not just in time. So what is the financial impact of what you're operating now? The financial impact of what you're operating now, assuming that is to say, now you are keeping factory, you are keeping warehouses, you are keeping closing stock. That means you have warehouses. The impact of what you're operating now means that you are going to spend 10 million naira as holding cost, because your head is strong, coconut, you want to keep warehouse. Spend 10 million naira as holding cost. Now, let's do another analysis on the ground that you are not spending on, you are not keeping warehouse. Now, when you are not keeping warehouse, it means that you are not going to spend money on holding costs. Let's check how much you are going to spend and compare both and see which one is better. Should you keep warehouse or should you not keep warehouse? Do you agree with me now? Do you agree with me now? You with me?
Yes.
Okay. Thank you very much. So we don't need to compete for 2. We only compete for 1 because we've already competed 1 before. So if we are operating on the way we are operating now, that was 10 million naira to hold inventory. That's how they to calculate the holding cost. But now that we want to move to just in time, it means that the company will no longer hold inventory again. But what is going to happen? If the company moves to just in time, it means that they no longer hold inventory. And since they no longer hold inventory, they must use over time. Do you agree with me? Since they no longer hold inventory, they must use over time. Yes or no?
Yes.
Yes.
Do you agree with me? It's not to say yes. So do you agree with me that they must use over time?
Yes, sir.
Thank you. That's what I want to hear. He understands. So let me tell you why. If the company does not use, if the company decides to use just in time, that means they must do over time. Because now they are producing 540 Abi. In quarter 1, then we have no issue. Are you getting me now? In quarter 2, then we have no issue. But in quarter 3, they can only produce 540. And since they are producing 540, they cannot meet up with 760. The question now says that it is possible to increase output by 40%. But let us increase this output by 40%. And if you increase output by 40%, it means that you are working what? Over time. So please do 40% of 760. What do we have? Increase that output by 40%. That's 304, I mean.
Yes, I
304,
think
sir.
I'll 304. Sorry, I'm 4,000.
Or you help me to add it to what you have produced. That's 844, I mean.
Yes,
That's
sir.
844.
844, sir.
Good. So it is this 3 and 4 that will make them to produce over time, to work over time. Because under just in time, if your customer needs 400, you can produce that 400 and supply to them. You don't need to stay, you don't need to produce, you don't need to store in the warehouse. And the capacity of the factory is 540 per quarter. It means that in quarter 1, no issue, they can produce 400, they have capacity of 540. In quarter 2, they can produce 440, they have capacity of 540 anyways. But in quarter 3, sir, they only have capacity of 540, they cannot produce 760. So the only thing that they can do if they want to even try to meet up with 760 is to increase their output by 40%. So 40% of 540, please, that will 40% of 540, that's 216. Oh, that's 216. Not 304, please. 216. Because they told us that it is 40% of output, not 40% of demand. So you are increasing your output, and your output is 540. So 540 plus 216 is what? That's 756.
756.
God bless you. Thank you. So that's 756. All these things are simple. Now, you have even stretched. You have stretched by 40%. You stretch to increase your production. Say, let me stretch my machine and produce. You are only able to produce 756. You cannot team it up with what? 760. How many are you losing? 760 minus 5, 756 is what? 4,000, Abi? It means that you are losing contribution of 4,000. Do you agree with me? Do you agree with me now? Do you agree with me? Please, Faith Januga, ask your question. Faith, please ask your question. Faith, please ask your question.
Can you hear me, sir?
Yes, please.
Okay. My question is, why are we using the 40% on the demand and not the capacity?
We did it on capacity. Please punch your calculator again. 540,000 times 40% is 216. We did it on capacity. The first time we did it on demand, we are wrong. The question says that it is possible to increase output, and output is our capacity, 540. Please punch your calculator. Are we good?
Okay.
Please, do you know why I said that if you are operating just in time, you would use you are going to make use of overtime? Isn't that clear? I am proving it. Isn't that clear? Please. Is it clear now?
Yes, sir.
Thank you very much. So let's go to our solution now. So look at it now. Sales demand for quarter 3 is above maximum capacity, including overtime capacity. Now look at what I can do. The demand is 760. And this will say what they need, what customers need is 760. But what you can only produce is 540. So let's go. So what you can only produce is 540. And then you even increase it by the 40% to work overtime. And the total you got is still what? 756. It means that you cannot even meet up with the 760. That means that you are going to tell them that, well, I cannot meet up with 4,000. And in finance, if you cannot meet up with something, it means that you will lose something. We call it production shortfall. If you cannot meet up with the production, it means you are going to lose the contribution from that production. So for this 4,000 that we cannot supply, it means that we are losing money for not supplying it. Does that make sense now? So this is the reason why we are saying that we are working overtime. So since we are losing 4,000, this is the 4,000. 4,000 times our contribution, because you are losing your contribution. 175, that gives us 700,000. I'm going to tell you how I got this 175. 75 is already in our question. Look at it here. This contribution of 75 here. Is it here? 75. We are going to lose 75 because as we produce that 4,000, we will get a contribution of 75. Test. So that is the 75. Then the other 100, I'm going to tell you where we got the 100 from now. Flow with me. Now, remember that if I work overtime, the question told me that if I work, anytime I'm working overtime, I am going to spend some money. Look at the question here. Look at it here. Anytime I am working overtime, look at it here. Anytime I'm working overtime, I'm going to spend money. What am I going to spend? I'm going to spend money on what? Overtime for labor, 150%. Come back here. Look at it here. Extra costs. Anytime that I'm working overtime. So over time, I'm going to spend money for what? 175. I'm going to spend extra 50% on that 175. That gives me what? 87.5. Does that make sense? Because what I was collecting before was 175. I've explained this one before. What I'm collecting before is 175 as a worker. So because you are working overtime, you no longer take 175. You will not take 175 plus extra 50%. So that 50% is what we are capturing because we are paying that 50% because you are working overtime. That is why in my solution, I am saying 175 times 50%, not 175, not 175 times 150% is wrong. It is the extra that we are paying you by virtue of the overtime that we are calculating. So 175 times the extra 50%. Okay, that's what. So what you are paying you extra is 87 naira 50 kobo. Therefore, the variable production overhead, we said that we are going to pay you extra 25%. So if we are incurring 15 naira for variable production overhead, and because now we want to work overtime, we're going to spend extra 25% again. To do 25% of 50 naira. That means that we are spending extra 12 naira 50 kobo. So add both together, this is what we are additional cost we are spending for every unit that we are producing over time. Please, does this make sense? Any question? Any question, please? I think if you don't answer me, I will not answer you. Is it clear now? Is it clear?
Yes, sir.
Or should I come back? Okay, it's clear. All right. So we have calculated the extra cost if we work overtime. You see the question. If you work overtime, you are going to pay your workers 50% extra in addition to what they have been collecting before. Is that 50% that concerns us because that 50% is by the virtue of you working overtime. Secondly, 25 naira is going to be paid. 25% is going to add up to our variable production cost. And that's what we have analyzed. We don't have any other adjustment again in the question. That is why our additional cost for producing overtime is 100 naira. So that 100 naira and 75 naira is what gives us this 175. Because assuming we were able to produce, no how we must get our 100 naira back. So now we are losing this 100 naira and we are losing this 75. These are the total things that we are losing. I don't know if I'm making sense. Are you understanding me? If we are able to produce this 4,000 and we incur 100 naira to produce one unit of that 4,000, won't we find a way to get our 100 naira back when we sell? Answer me. Won't we find a way to get our extra 100 naira that we are spending on overtime when we sell?
Yes, sir.
Good. So because we are unable to produce this 4,000, it simply means that this 100 naira that we would have gotten from the sale, if we were able to produce this 4,000, we are losing it. And this 75 naira on the normal product, we are also what? Losing it. That is your 175 that we have here. Are we good to go? Are we good to go? So in essence, the company is losing 700,000 naira for not being able to produce 4,000 units. Are we good to go now? Okay, good. Now the next thing that I want us to calculate is our quantity produced during the overtime. If you know the cost per unit of the cost per unit that you are going to incur extra, what is the quantity that you are going to produce extra if you work overtime? If you work overtime, what's the quantity you are going to produce extra? We have done that before. You know that the overtime will only affect our third and fourth quarter. Third and fourth quarter. Therefore, the quantity we're going to produce overtime is going to be 40% of 540, 216. We've done that before. This is the 216 here. Because we can only produce 540. So we are increasing this 540 by 40%, and this 40% is because we are working overtime. So do 40% of the 540, it simply means that we are producing an extra 216 units in the third quarter. And in the fourth quarter, we can only produce 540. And we want to sell, our demand is 560. That means we'll be producing extra 20 units for the fourth quarter. Do you understand it? Look at it now. For the fourth quarter, our demand is 560, but we can only produce 540. What is the extra unit that we'll be producing if we want to work overtime? Is 20,000. Isn't it? Perfectly. For the third quarter, you can only produce 540, but you need 760. So 220. So we can we are actually increasing it by what? 220, but because we are using 40%, our 40% of 540 is what we are producing extra. Okay, extra, which is what? 216. We can't use 220. 216. So 540 times 40% is 216. That's what we're going to produce extra. For the fourth quarter, 560 minus 540 will give us 20,000. That's what we're producing extra. So now that we have our extra units and we already have our extra amount that we are spending, let us prepare our statements. All right. Now, why are we doing all this extra? Because of just in time. Just in time is telling us that if we operate at just in time, we're going to incur extra money. So we're completing our extra money we're going to incur. If we get our extra money 100, we need our extra quantity to multiply it with now. That's why we're calculating our extra quantity. So I am not just solving blindly. I know what I am calculating. Once just in time tells you you're going to spend extra money, I mean, just in time says that you're going to work overtime. Working overtime simply means that you are going to spend extra money, and that extra money is going to lead to you producing extra quantity. So the extra money is what I have calculated here as 100, and the extra quantity is what I have calculated here. Quarter 3 is 216, and quarter 4 is what? 20. Am I making sense now? Good.
Yes, sir.
All right.
Please, can you talk on this 175 naira that used to times these 4,000 units?
These 4,000 units, you're unable to sell it.
I understand the 4,000 units.
If you are unable to sell it, you must multiply it by what you are losing. If you had produced, or if you were able to sell this 4,000, you are going to recover the normal contribution that the person gave to you as 75, and you must at least recover 100 naira, which is your additional what? Cost incurred. Now, let me tell you something that the question did not give us. The question did not give us the new selling price if we had to work overtime.
Okay.
So since they don't give us the new selling price, since we have to work overtime, we are assuming that this 100 naira that we are going to spend for working overtime, we are supposed to get it back at all things being equal, if we sell. So this 100 naira plus the 75 naira that is in the question normal, that gives us 175. You don't get it. Am I making sense? Are we on the same page?
Yes, sir, very much.
Good.
Yes, sir.
All right. So that is that. We are done. We have done our work. Now let us compute now. Now, because we are going to work just in time, now it means that we need to spend money, isn't it, to work overtime. Since we don't have to be doing opening stock and closing stock, spend money to work overtime. So if we are spending money to work overtime, it's only going to affect us for the third quarter and the fourth quarter. So for the third quarter, how many quantity are we going to produce for the third quarter extra by virtue of overtime? That's your 216 that we have here. That's the 216 that we calculated, which is 540 times 40%. That's the extra that we are producing. Okay, that we can produce max. Although we needed 760 minus 540, we needed 220. But we cannot meet up with the 220 because we can only express by 40%. So that 220 times 40%. I'm just trying to know this. That's 88. 88 minus 220. Don't worry. You don't need this. All right, let's just continue. So our 216 is the quantity that we are producing extra under the third quarter because we are working overtime. So that 216 is what we have here. Multiply by what? The extra cost of working overtime is what? 100 naira. That's 100 naira. That gives us 21,600 in 1,000 is up. Then for the fourth quarter, we are only going to produce 20,000 units because our demand is 560. What we can produce is 540. So what we are producing extra is 20,000, and we can only produce extra if we work overtime. And when we work overtime, we're going to spend 100 naira. So 100 naira for 1 unit is 20,000 units. That's what we need here. 20,000 units is 100 naira. That gives us 2,000. That means that if we work overtime, the total money we are going to spend is what? 23,600. Don't forget that even at the point of working overtime, we lost money. Because as we had warehouse before, we would have not lost that money. We would have not lost that 4,000 units that we lost here if we had warehouse. But because we don't have warehouse, we are bearing the consequences of that 4,000. So that 4,000 that we lost, which we valued at 175 naira, which gives us 700,000, we are going to add it to the 23,600 to give us the total cost for us operating just in time. So if we operate just in time, we're going to spend money equal to 24,300. But if we had operated with warehouse, we're only going to spend what? 10,000. So the difference is that there's going to be an incremental cost of 14,300. So which is better? Should we operate just in time, or should we operate at our normal way of operation? Normal way, because when you operated your normal way, you were only spending money on warehouse of what? 10 million naira. But now that you're operating just in time, you are spending more, 24,300, which is 14.3 million difference. It's too much. So please, do not operate just in time. Keep your warehouse. Keep using your warehouse. If you keep using your warehouse, you do not need to work overtime, and you will not also be spending and losing 4,000 unit sales. That is here. Are we good to go? Are we good to go? This is it. This is it. The attempt on this question by candidate was very poor, was very low. The candidate recorded below average performance. Why? Because I did not teach them. But if I had taught them, they would have not recorded low performance. Any question, please? Any question, please?
Yes, please. I have a question.
Please proceed.
Please, can you hear me?
Please proceed.
This variable cost overhead, and that's the 12.50 and 75, the 100 naira share. Is it a cost now or a revenue? Because you were saying that this is the amount we will lose if we. So I'm trying to understand, is it a cost? Because if it's a cost, we are not losing anything now. But you kept saying this is the amount we will lose, this is the amount. So is it a cost to a revenue now in this case?
It is a cost and also a revenue, because all costs must be recovered via revenue. Am I making sense now? So if you are spending 100 naira as additional cost, commonsensically, your selling price should also increase by 100 naira or more. So the lowest that your selling price will increase by is 100 naira. This question did not give us the new selling price if we are working overtime. Because technically, if a client gives you job and tells you that, I don't care, you want to do it, whether you don't sleep at night, whether you don't do this, just get my work done. Please, I need to charge that client the same amount. With client that says, I can wait till anytime that you finish, give it to me. Please, I need to charge them the same amount. Talk now. If you are a tailor and somebody gives you clothes and says that you can take your time, sew the clothes and not rushing you, and somebody saying that sew my clothes for me 2 days, is it the same price you are going to charge them? Ah, Jesus. The lady that asked me now, you are the reason I'm doing this. Is it, can you hear me?
Yes, I can hear you.
And
I lost you for a bit, but I can hear you.
You are the reason I'm doing this. I'm giving you a scenario. A tailor, you are a tailor, a fashion designer. Somebody give you clothes to sew and say, Madam, sew my clothes for me. I'm not in a haste. If like take 2 weeks, no concern me, but I need it next 2 months. It's far. Do you need to work overnight to do that clothes?
No.
What about the other person that says that, okay, I need my clothes tomorrow, or I need my clothes in 2 days' time? Will you not work overtime?
Yeah.
Yeah.
So both of them now, who are you going to charge more for the same clothes? Who are you going to charge more?
The immediate one.
The immediate one. Now, please tell me, what is going to be if the normal one, for example, if the normal one, if I'm to sew for you without you rushing me is 150K up and down. Now, for you to rush me and I need to sleep, I need to work overtime. Please, what is the minimum amount I can add to this 150 to get the new selling price for this guy? It's not the amount of my overtime. Talk now. It's not the amount that I spent for my overtime.
Yes.
Good. So the amount that this person is spending for his overtime is 100 naira. That is the minimum he can add. He can still add more, but the least he can add is 100 naira. So if you add it both, our selling price is supposed to be around 250. 5K. So because this question did not tell us what the new price would be, we are using this logic. So we are saying that if we work overtime, this 100 naira that we have incurred as cost, this 100 naira that is a cost for overtime, will also become a revenue for overtime, because that is going to be the lowest amount we are going to have to get our selling price. Therefore, that's why I always use, that's why I'm using the word lose. You will lose. So even as the question is saying that you are incurring this cost, you are also losing it, because if you have incurred it, you will also have recovered it if you sold. Do you agree with me?
Yes.
So that is why I added this 100 naira plus this 75 naira. See, let me tell you this question. So many lecturers have sent this question to me to solve, because they are unable to get this 175. I'm giving it to you free. Look at what they were doing. Look at, because I can't use the word contribution here. So this contribution is supposed to be selling price minus variable cost. So what many of my colleagues were doing was that they came to the question here. Let me tell you what they did. Look at what they did here. They came back to the question using the same selling price, but increasing this amount and this amount. Okay, they didn't increase that amount. Look at what they did here. You know this 175 now will now become 175 plus that additional. What's that additional? 87.5, Abi, which is the additional that we are paying for overtime. 87.5. Look at what they did though. I got DMs. They were unable to provide solution to it. Then this other 50 will not be 50 again. It will be 50 plus what? 12.5, Abi. Let me clean it so you see it. 50 plus 12.5. Isn't it? That's the additional you are incurring for overtime. 12.5. Now let's do it now. Plus 12.5. Now let's add it. Please work with me. Do 175 plus 87.5. Somebody should do it for me. What do you get, please? 175 plus 87.5. Hey, my phone has off. Can you hear me?
262.5. Yeah, 262.5.
262.5. Hold on, please. Hold on, please. Imagine. 262.5, I mean 262.
Yes.
262.5. Now do 50 plus 12.5. What do you have? Sharp. 50 plus 12.5. What do you have?
62.5.